AI is everywhere right now. It has flooded our consumer apps, it's writing our emails, and it is taking over enterprise systems almost overnight. We are watching literal humanoid robots step into the real world, promising to handle physical labor and automate heavy industries. And powering this is an immense hardware infrastructure. Companies like NVIDIA are absorbing massive financial capital to build the chips keeping this revolution running. For the everyday retail investor, the math seems obvious. You buy tech stocks, and they go up. Right now, there is an absolute euphoria in the market and a widespread belief that this upward trajectory has no ceiling. The public is treating this technology as a guaranteed, infallible ticket to wealth. But there is a quiet reality unfolding right under the surface. While everyday people pour their life savings into these companies, institutional insiders are doing the exact opposite. We are seeing a calculated, silent exodus. The people who actually understand the complex financial mechanics of this boom are quietly selling off shares and taking their profits. This creates a visible friction between the technology's promise and the actual movement of money. If AI is going to transform global industry as the headlines suggest, the people closest to the balance sheets shouldn't be rushing for the exit. Financial history proves a hard truth about technological leaps. Every major innovation triggers the exact same pattern of market psychology. This chart breaks down the 4 universal stages of a speculative asset cycle. First, you have the spark of actual innovation. Then comes the frenzy of retail buying. This leads to the disconnect, where prices detach from reality. And finally, the reversion, the crash. Look at this exact same timeline overlaid with data from the late 90s internet boom. The internet obviously changed the world. It was a real, valuable innovation. But as you can see, stock prices in 2000 were entirely detached from reality, and they collapsed anyway. We saw the exact same trajectory in the recent cryptocurrency cycles. The psychological frenzy created a massive spike, followed by identical financial destruction. A technology can change the world, but that utility does not protect its investors from a catastrophic market correction. This brings us back to today's AI giants. Right now, these stocks suffer from a specific financial anomaly. They are what analysts call priced to perfection. This chart shows exactly what that looks like. This small bar represents the actual cash these AI companies earn today. The towering bar next to it represents the decades of flawless, infinite future growth that investors have already factored into the current stock price. That massive gap is structurally unstable. When a valuation requires a flawless future to make sense, there is zero margin for error or economic slowdown. This creates a counterintuitive trap where good news actually hurts. Because expectations are so high, simply hitting baseline targets or reporting decent earnings is no longer enough. If a company doesn't vastly exceed these massive expectations, the stock drops. When the market prices an asset perfectly, reality itself becomes the trigger for a collapse. The market has effectively converted a legitimate technological breakthrough into a structural financial trap. In the coming decades, artificial intelligence will physically reshape global industry, automation, and labor. The hardware is real, and the utility is expanding. But the harsh economic truth is that the current stock market has essentially spent tomorrow's money today. The gap between what AI does right now and what investors are paying for it to do tomorrow is historically unsustainable. The impending market correction will punish the people who confused a technological revolution with a safe investment. Artificial intelligence will easily survive the coming decade, but the portfolios of the investors buying at the absolute top of this hype cycle will not. Which leaves us asking, are we funding the future of human civilization, or blindly buying into the most expensive illusion of the decade?